Hello guys, welcome back to another lovely trading video, and this one we're going to be doing some in-depth stock analysis on AMC. Reason for this is it was just requested in the comments a few times, and also before this we did upload an analysis on GameStop if you wanted to see that, and before that we also uploaded the weekly recap on the small account if you wanted to check that out. But now to get straight into it, as always we start off on a clean daily chart so we can see is there any gaps that need to be filled, because the majority of gaps do get filled, so we can usually use these as good price targets. So right off the bat we can see the one very far down at $4.08. Obviously that's not something we're most likely going to see in the near term, but it's always, I guess, a good idea to have it. One that's a bit more realistic will be this 16.50, which was forced from that big original gap, and really that's the only clear gaps we have. Obviously you do have gaps, for example here at the $45 mark, but when we're looking at gaps we're looking for very obvious ones where the next candle doesn't even come close, because then it's very obvious to whether you're a trader, investor, day trader, swing trader, doesn't matter, that's going to be obvious to you when you're looking on a long-term time frame. Whereas the ones like this, yes, it's a gap, but it's not as clear to everyone, so we don't tend to trade off these because they don't tend to have a significant reactions coming into these levels. So really they're the only two gaps we're looking at as of right now. So now we'll go on to this standard deviation chart, so we can start saying where are our low risk buy zones, where are price targets, and all of that. And one thing you would have noticed, especially if you're in the Discord, we did post this, but we did see AMC come into the first deviation on both the 4-hour and the daily. Now, we personally didn't take this long, mainly because I don't really touch meme stocks, but if you did, it would have probably been an area to take long. But what we did see quite quickly is it did break through this level, came back, retested. Now when you see this and you see rejection, more likely than not then the stock's going to continue down to that next standard deviation. So instantly off this we kind of know, more likely than not, AMC is going to push all the way down to $18 now. The reason for that is, it's kind of confirmed this level, it's rejected over it one more time, so we would expect it to come down to at least 24.60, but we would have more of an expectation for it to come kind of down to that 17.50 cent deviation, which would be considered our long area. So on AMC, the next place we're looking to get long is this $17 level, all the way down to kind of 14.50. This is an area where we'd probably look to put, let's say if we were going to go into the trade with $4,000, we'd probably put $2,000 at $17 and another $2,000 at $14.50, because the bounce could happen at the $17 level, but it could also push down that bit further to that $14.50. So we like to kind of average in our entry, because if it bounces at 17,000, then no matter what we're still going to be in with some amount. But if we put in all our money there and it pushes down to 14.50, it's going to be a lot harder for us to become profitable on the trade, and we also lose out on a lot of gains. So that's why we tend to average into those kind of positions. And then on the very low end, which is quite unrealistic, is obviously you got the gap fill at 408 and then the bottom deviation at 255. Obviously if AMC comes down to that we would trade it long, but it's very unrealistic to kind of see it coming down there, at least in the short term. So for right now, really all we're looking at on AMC is for it to continue down to $17 or $17.25. That's where we're going to take our first long entry, or consider it a low risk long, and then we would have another low risk buy zone at $14.50. Also, what is adding into this is you do also then have that gap fill at $16.50. So that's why we may not see it push down to that $14.50 mark, because we most likely come into that first deviation or second deviation, which is $17.25. It'll probably push down to that to fill that gap, and then we would expect to see a lot of buying pressure come in, and then we would have a first kind of key target of $32. Reason for that is it's a first deviation, so if AMC did want to continue down further past that kind of $14 level, it's going to most likely come back, retrace to this first deviation before continuing down. That's usually the trend you see. So we tend to use that as our first profit target. Whether you're looking in profits there is up to you, but we would at least move our stop. Now we would have kind of a final target of statistical mean, so that would be around $46. The only risk you're taking with AMC going for statistical mean is that kind of the hype with it, a bit like GameStop, the hype is kind of dead with these stocks now, or at least reduced a lot. So seeing it push back to this 46.50, even though it's statistical mean, we could see it struggle a bit more. However, unlike unlike GameStop, we are seeing AMC deviations both facing strongly up on both channels, which does give us that kind of added confidence that it should get its bounce. So really, we would definitely be locking in some at $32 and moving our stop. But if you want to hold some to 46, that is kind of our final target that we would look for. So I hope you enjoyed the breakdown on AMC. Hope to see you in the next one, and that's it. Peace.
I wanna go, I wanna fly, I wanna take myself